Well, good afternoon, everybody. Hello, guys. How are you, mate? Hello, Wayne. G'day, Shane. Guess we're very well in Perth today. Thank you very much. I hope you guys are all good. You can hear me okay. And yeah, just let me know that all's good from an audio and a visual point of view, and we'll get rocking and rolling. Thanks, Shane. Cheers, Wayne. All good. Right. Well, let's get into it. Bit to cover in terms of ground, of course. Put up this important message first. These are the opinions of myself, not necessarily representative of Go Markets. And obviously, we are looking at live markets, so please bear in mind that this is for educational purposes, and really you should be doing your own due diligence and, of course, following through on your trading plans as appropriate. Good to hear from you from Barley, John. I hope you're having a good morning. Cheers, Bob. Okay, so let's get started. We'll have a look at what's come across the news, right? Overnight, we had US markets pushing higher again, and the Nasdaq's outperformed, which is unusual in recent times, of course, with the Nasdaq closing higher around about 1%. Other major indices about 0.5%. US futures have really not done anything since Asian Open. They've been trading up slightly, down slightly, but really around neutral. Do notice that Nasdaq is starting to just eke its way a little higher, which is interesting, and Asian markets have followed that positive US lead. We are actually seeing, just when I checked in on the ASX before we started, I did notice that we are trading towards the highs of the day, about 0.7% up when I last looked, and we've got a fairly broad-based rally for right now, of course. And the FX front, the US dollar index has continued to bounce, and that's really off a key level at 91.50. We'll have a look at charts in a moment. Precious metals are trading in a tight range just underneath resistance in the case of both gold and silver. On the data front, we have got some data out today which does have the potential to just shift markets a little bit. We've got Japanese and US industrial production numbers out. We've got German economic sentiment and US retail sales later on tonight, which will be the major data releases. But, and here is the thing to take special note of, the Fed are meeting at the moment in the US, or not right at the moment. We'll be meeting tonight and will release their interest rate decision, but more important, the policy statement that goes along with it on Wednesday evening. Now, this is going to be critical. This is probably going to result in a little bit of caution pre-meeting, but there are a number of different ways that the Fed could go with this. Obviously, they're not going to shift interest rates right now, but the market's going to be looking for clues as to what they're feeling at the moment. My suggestion is my thinking is that they'll possibly reference soft inflation. That number last week was very positive in terms of no signs of any, outside of oil and food, no signs of any inflationary pressures to the upside. But of course, they may reference that, and any changing language at all may push bond yields higher, and ultimately that result in an equity market drop. So it's really a flick of a coin in terms of what might happen after Wednesday. So just bear that in mind with any positions that you've got open coming into Wednesday evening. I hope that sort of makes sense. Though I don't think there'll be, I think that, as I said, I think that there'll be a continuing accommodative sort of tone, but it just depends on whether there's sometimes it's just the insertion of a word or two that can make quite a difference. And really over recent months, it's the market's response to the Fed's comment, even if they've been accommodative, hasn't been particularly positive. So it just concerns me a little bit, and probably the market as a whole for right now. So let's just look at a couple of other things that are going on, just to sort of, we'll have a look at futures. First of all, now, as I said, the Nasdaq, these have been trading around about neutral for most of the morning, but these are about as good as they've got over the last over the last hour or so. You can see the Nasdaq is pushing higher now. That Nasdaq's obviously underperformed the underperformed the other indices over the last couple of weeks. We can see the 10-year note pushing higher. That's not a bad thing, but you can see that VIX is quite high considering there isn't really much action at all in equities. So that VIX futures contract is suggesting that uncertainty, and that may be Fed created. Very little movement at all you can see across the bottom. Normally what we do here is we look for currency pairs that are doing well versus others that aren't doing so well against the USD, but the USD is pretty static, and you can see there's very little movement in currencies at the moment, with possibly the Kiwi slightly outperforming and the yen slightly underperforming. So we'll have a look at those in a moment. See gold and silver slightly to the upside. Oil have just come back off a little bit, but WTI crude is around about 65. That's the resistance, and around about 70 for Brent. But they've just softened a little bit in today so far. Copper, from a resource point of view, is not doing anything really, but has had a relatively good run up over the last couple of weeks. In terms of the economic data, let's just check in on what's come across so far. We've had the RBA minutes have not shifted at all. If anything, they've helped a little bit with that house price index coming up a little bit again by another percent. Another 2+% beating expectations. And you can see that Japanese data is due to come out in a couple of hours or so. So that may have a further impact on the yen. And that may be where the FX opportunities align at the moment, but we'll have a look at some charts in a moment. The economic sentiment out of Germany is interesting, but the retail sales is probably going to be the major driver tonight, along with industrial production numbers that come out of the US. The 20-year bond auction, not as important as the 10-year we had last week, which was did no harm to markets, but nevertheless will be viewed with some interest. But it is the Fed on Wednesday that are going to be the major driver, as I've suggested. Okay, so all that being said, let's just have a look at some charts. Let's quickly reorganize my screen. Apologies. Toolbox. Okay, we'll start with the US 500 daily. Why not? So you can see record highs again on the S&P 500. As I said, pretty neutral today, but that 3600 looks like an important level. We're here mid-Feb, had that big pullback of around about 5%, but since then, really, it's been a continued up move on the back of nothing really positive. And this is a difficulty I'm having at the moment, although I don't see any major tailwinds. The market still seems to want to climb a little bit. The thinking is that some of these stimulus checks that are going to hit people's hands, they may go into the market. Obviously, there's a general good feeling about the fact that more people are getting vaccinated. But outside of that, there's very little to hang your hat on to say, look, this is going up significantly from here. So all will be dependent on the Fed as to what happens next. If we look at the NASDAQ, this has some distance to move. Remember, we're at record highs on the Russell, the Dow, and the S&P 500. But you can see that major pullback we had on the NASDAQ. Down around about 11%, but we've had a nice bounce off that level at 12,328. And as we've already said, we are up in trading today, and this looks like an important level. If we can hold and push through this, where we are now, there could be a short-term opportunity. If we look on the 30-minute chart, for example, you can see how this is a really quite an important level here. So perhaps see where this candle ends up. We need 26 points above that, essentially 13092 to be, sorry, 13 points above that, and we're actually at that level now. So we just need this candle to turn a little bit, and that might get us interested in accumulating more into this this position. Good day, David. China GDP just came out at 6.5%. Will this affect Aussie, Canadian, and Kiwi? We'll have a look. Theoretically, it depends on what the expectations were, Hugh. That that's the dependent factor, but we'll just have a quick look at that in a moment. US dollar daily, we'll start with that before we look at some of the other FX pairs. There's that bounce we talked about with that equity. Equity sort of around neutral. We're getting the same picture on the USD, only marginally higher, but that 91.50 looks important. And consequently, because of that last couple of days of move higher in the USD, then that obviously has been reflected in some of the USD pairs. So it's actually very difficult to find something that that looks compelling. We've got this is not an uncommon picture. We had a key line on most of the USD pairs, which has been rejected over the last couple of days. There's the euro as an example. So we've got using the 200 MA as a support. We've got resistance at 119.80 there. So potentially, if there is some bad news off the Fed, we could see it move back down to this level here that we touched last week. Obviously, too early to call that. If we look at an hourly chart, again, very, very little to actually hang your hat on there, unless you're in and out for a fairly small pip amount. If it does break this level at 119.13, then really you're only talking maybe 30 pips there for short-term traders. Look on a 30-minute chart. So that's the level we're talking about there. But as I said, nimble in and out, no messing around with any of these pairs. We didn't look at gold and silver, apologies. We'll quickly look at gold. There we are, there's the bounce off that we had last week. Made our way up to about 1737, but sort of look at these long wicks. There's certainly indecision there, no compelling reason to get into this. And likewise with silver, these two are moving together now. We had a little bit of a disparity for some time. We'll maybe talk about gold. There's a gold-silver ratios. There's a session coming up on is it time to buy precious metals? It seemed like a worthy topic to talk about. That's next week, so watch out for the email relating to that, but I'll make reference to that on Tuesday, Wednesday as well. But you can see silver here is 26.20. It looks like a key level, but we've tried to break through this 1, 2, 3, 4, 5 of the last trading days, and we're still sitting there on day 6 in Asia so far. Look at the Aussie US. I've put this on an hourly chart. There's the daily chart resistance that we pulled back down from in the last couple of days. So it looks as though we've got some support going on around about this level here, that we did test it during the night with that significant candle there, but really going nowhere. On the daily chart, you'll see again we've got that 200 MA as a temporary support in place. So even if we drag this down to here, it's really smacking of indecision at the moment. So 30 pips top and bottom from where we are now, trading in the middle of that range. If we look at US yen, this is just every time we talk about this, I'm just staggered at how it's continuing to go up. Just to put it into context, there's the last time we're at this level. So we're now at sort of April, May 2020. You can see we've pushed through that 109 important level, and so eyeing this now. Obviously, the US yen doesn't move a great deal in comparison to some other currency pairs, so you can see really there isn't that much from where we are now up to that key level at 109.55. So around about 35 pips again. So if we look at the hourly chart, there we go. I can see it's not far at all. even 25 pips if we break that. So again, not hugely compelling at all. GB pound yen for sure, Ross. So here's GB pound yen. My thoughts on GB pound yen are we're stuck. There we go, 150, 150. So we had a little peak above that level 3 trading sessions ago, but really since then we've flatlined. But we have a nice potential entry there. If we look at the pivot highs from the last couple of days, they're around about the same level. So we stick that on an hourly chart and we can see this level there around about 152.08. Maybe pop it a couple of pips above that. But that would be the upside level. But it looks as though there's more pressure to the downside. But again, we're just feeding on nothing here. There's no big moves pending, even if we break that with 22 pips to the downside. GB pound Aussie looks interesting. I'll show you why this looks interesting. So on a daily chart, we have moved back down to 179.15 as a support level. Just put this on a line chart. You can see there the next key level is quite clearly around about that 178.40. That bottom yellow line is the 50 EMA, which it's got to get through. So if we do break through that, that's not insignificant. We're around about 60 pips. So this is our FX chart of the day today, is the GB Aussie. Just take it back out a little bit further. If we are tempted into this, then there could be a pause at this level here, which is at the 40 pip level. So in this market, 40 pips is good. Anything outside of that, I was looking and I just felt you'd be forcing trades really. So that really is the only one that's catching my eye for right now. And this sort of indecision, that trading around key levels, is just really sort of reflective of how important this Fed meeting is tomorrow evening. If there's any others you want me to have a look at, then I'm more than happy to do so. If we look outside of FX, just look at a couple of the other indices. Look at the DAX first. I'll stick on a daily chart. Obviously, we hit record highs on the DAX, but you can see we've just topped out a little bit. So we're looking for some reason to break this 14,516 level, and that German economic sentiment might be the thing to push it higher. So just watch this afternoon, but be nimble again. And if we look at the China 50, which really hasn't recovered, but we are seeing something here that looks quite interesting. At around about that 17,034. This was support. We had a little bit of a sell-off yesterday, but we appear to have some interest coming back in again. So we're looking really at a break above that level. How much upside it's got is debatable. Maybe about 2% to the upside. But that could be one to watch also. But at the moment, it's probably not for today. It's trading within a range and really doesn't look as though it's got a motivation to get out of that for right now. So we'll come back to any FX pairs that you want me to have a look at, but I just wanted to have a look at the share side of things because there's some interesting action going on there. So let me just refresh everything up to see where we're at now. Wow, okay. So really, we're at the highs of the session. As you see there from the chart, we're up nearly 1%. That house price data seems to have helped things along a bit. We're a little flat to start with for the first hour or so, but really in the last hour and a half, we've just continued to move higher. And if we look at advances versus decliners, this is I have not seen this for some time. The 165 to 32. So we're getting a very broad-based rally across most sectors. So most of those that aren't doing particularly well, I'll come back to that, David, in a moment. I'll come back to the Aussie Kiwi. Most of the ones that aren't doing well, it seems to be stock picking to the downside as well. So most of the resources are doing well with the exception of BHP, which has pulled back a little bit. But you can see the banks, ANZ are doing okay. CBA are doing okay, but we've got a couple of the financials not doing so well. Challenger is down, Bendigo was down. Retailers are having a strong day. And we've got Qantas up a smidge after a major tear yesterday. And we've got Webjet, just to sort of say that there's positions you saw that I'm in both of those. Zero interest, we're going to have a look at those in a moment. And Zip seems to be having a bounce, we'll have a look at that. So a really interesting day. I'm not sure what is driving this apart from the fact that the ASX has underperformed just about everything else. But you can see Oz Minerals are up, FMG are up as well. Energy are just marginally higher with that weakness in oil. So really there's quite a positive vibe going on. So let's just have a look at some charts. So we'll have a look at Xero to start with. This is one we talked about last week when it was we referenced this 200 MA as a potential breakpoint, but you can see the sharp move higher today. Let's put this on a line chart. I think that might be an old line. So really, there's a couple of ways you could look at that. That was what I saw as that sort of 118. Very aggressive. You could have taken it. Which I happen to be on this one. You could have taken it around when it broke that 200 MA, around that level there. So even to that peak there, there's about $3. Okay, it's about 1.5%. So for a short sharp potential trade, there's that. For a longer term, there's that 123.20 level that looks interesting. Let's put Qantas on, which we've been talking about ever since the $5 mark. We're sort of getting used to these candles here, which don't particularly look compelling. But there's Qantas pushing higher again, up to 553 right now. So we did have a move to the downside early on. If we just look at there was the opening candle, very strange. We shot up to 558 almost immediately on open, and then pulled right back even below yesterday's close, which was around about that 548 level. But you can see we're trading towards the top of the session again. Looks as though there's some momentum still in this. That may have been a little bit of short-term profit taking once it hit that. So for those of you who are in this, it's a really interesting place to be. It could pause at this level, but you may want to plant your flag at that 567. If we take this back to a weekly chart, though, that's only one session, okay, and you can see that's only on the let's pop it on the daily chart again. So that was really only one closing candle above where it is now at 553. So if we look back at the weekly chart, you can see this is highs that this is almost pre-COVID highs. So mid-February. So the thinking is that in the next few months we're going to get a resumption of normal services. But whichever way you slice it, there is some key resistance there at 576. So it might be the situation that that you may tighten a stop if it gets towards that level and doesn't fade here. And you're in this, then perhaps tighten a stop as it gets to that level may be the way to go with this. But at this stage, it's doing so well. And of course, if we look at Webjet as well, we looked at all of the travel stocks last week. So again, we'll pop it on a daily chart. There was the break we liked last week at 575, and that's just continued higher. That would have been a tricky candle to get in on, but would reflects the fact that we were here. So if we look at the high close from November, then we sort of broke that, and now we're away. That's that break over $6 looks important. Again, we'll sort of take that right back. This has a distance to go. Okay, so it's still, if we look at pre-COVID, it's still 55% down from where it was. So you look at those two, you look at Qantas and you look at Webjet in this space, although they are slightly, they're going to respond to the same things. So you've got to look at that and think, well, look, where if I am interested in a long-term trade, where would my money potentially do me better going forward, as I said, for the long term? And really there looks to be more upside potential in Webjet. Now the other one, of course, in that space is Flight Centre. Very similar picture. If we look at the daily chart, there's the high we hit in again in November. That was post-vaccine news. Bring that right up so you can see it up close and personal. So we had that pullback yesterday after that big jump once it had gone through that 200 MA. So quite choppy. We've got a line that says we might get interested in this if it breaks 19 bucks, because that'll break this. There was the closing high at 1930. So that could be a level to start getting interested in Flight Centre. Outside of that space, just looking at a few things. Macquarie were one of our favorites of late. We had that pullback along with most of the banks yesterday, but now we're moving up. We've got a nice level at 152.19, which would represent a closing high on that now. Any others you want me to have a look at? Wesfarmers, where have they gone? Okay, so Wesfarmers, nice potential bounce in the making, but I would say still a little way to go before we get a signal to get in here. This level at 50.75 is important. If we just put this on a line chart, takes out some of the noise, you can see why, okay? But over the last, you can see how this attempt to move up, then move down, attempt to move higher, then move down, attempt to move higher, then back to this level again. Test it 1, 2, 3 times if you include today. So this 50.75 level looks strong, and of course we've got the potential to close this gap. Should it break through that level? There's about a 3% upside in that. Kogan. There we go. Kogan on a daily chart. Let's just let it catch up because it's nothing like that right now. Still too early for my tastes, although it is that 1380 looks important. You can see it was support for perhaps a week, but there's been resistance for the last 3 days. So an aggressive trade would be over $14, perhaps. Iluka had us interested when it was around about the 1750 mark, when that 200 MA is. So this to me is a rotten chart, whichever way you slice it. I'm not seeing a reason to get into this really right now. If you're very keen on this as a company, then perhaps a move over 710 might take you back up to the 200 MA. But to me, that's very limited upside. With very little compelling reason to act. FMG. Resources have underperformed the market generally, of course, and FMG are a good example of that. Again, I'm not seeing a reason to go along on this until it's back over back over $21. Let me just alter a couple of things here. There we go. I'm just reducing the number of things I have open. Okay, there we go. So I'm not seeing a reason to act there yet. Okay, we'll come back to, do I see a triangle with CSR? So we've got CSR Sugar Company. Look, if we put it on a, I'm really seeing this in terms of a, you could suggest, I guess, you could suggest with these higher lows, you could suggest an ascending triangle type of pattern, not looking particularly compelling unless it breaks that 576 level. Really struggling to break that. Zip, absolutely, Anthony. That was one of the ones I did promise to have a look at. So we'll skip down to Zip, pop it on. Zip looks interesting because we look as though we're trying to find a bottom, and it's certainly outperforming Afterpay at the moment. We're really struggling to break a level. Now, again, this is not a bad story in terms of a company to be interested in. So let's put a support level at around about there, around about 820, which it's tested intraday a couple of times, and obviously is reflective of where we were in September. So we look as though we're getting a rounded bottom type of formation here. Very early to get into this, but this candle would represent the highest close, obviously, in the last 6 days. So there could be some interest coming back into this. Let's put that line back on there. But will suffer if bond yields rise, and that seems to have taken Afterpay and Zip down. Will suffer significantly, but that just seems to be a more than brutal sell-off, with both those companies doing well. Obviously, Afterpay is the stronger fundamentally, but then its price is up $120. So an aggressive trade, perhaps it might be one you might want to accumulate. You could accumulate into perhaps as a strategy. Maybe if we look at Afterpay in comparison, again, we look as though we've found a bottom on this at around about 102.90, but we're struggling to move away from that level. Even you can see how choppy it is. This is beginning to resemble a triple bottom type of pattern. So on closes, you'd actually move that line higher, and would probably be looking at a break of that high. A break of that high there. So with a support line there, maybe. So it looks as though it's in terms of close prices, it's trading within a $10 range, and which is quite significant, of course. So that's our comparison of the two. So at this stage, Zip looks slightly technically slightly better. Afterpay is the stronger company and could be pushing way up there. But in terms of our chart of the day, then we're finding it hard to move past the one we put up first of all, which is 0. So that's our ASX chart of the day, quite simply because of that significant buying pressure coming through. Just a quick look around the US. Obviously, it appears the Nasdaq is further to go, but the Nasdaq is going to be more sensitive if there is a resurgence of resurgence of bond yield rises. But just a couple to have a look at. We talked about Caterpillar is one of our picks in our longer term thing. If it broke 220, and there it is, boom. Still think there's further upside in this. that stimulus package has helped things up. The airlines are going la-la, being the technical term. There's the delta, but that candle says we've rejected any move higher from this, and LUV is the same. So we're not particularly struck by, there's LUV, not a compelling candle, even though we got that big move yesterday on open. So some buying seems to have come in back into the airlines. They're starting to see more bookings, which is probably helping us. Oh, LYC, of course, why? How could I forget LYC? We liked this last week on a break of that level, and sure enough, we got one. Sorry, let me just draw that a little more accurately. So we liked 615 as a level. If we put it on the line chart, you'll see why. So it was resistance there. We're looking for a turn in this. So it's looking pretty tasty where it is. Now, bear in mind that, so this will be the highest close since that, since the 3rd of March. But it's full percent up to the high there, up to the closing high there. So even that looks worthy of a peek at. Put Microsoft on. This has some an interesting level at 237.20. Not broken that yet, but you can see the potential cross of the shorter term MAs, which have been bouncy plus. If we get a break of that line, that'll be confirmed, and we should be heading up to 244 technically. And Starbucks was the other one that we have been talking about for some time, with the key level around that 106.70 level. Now this was interesting because this was the high close yesterday. So this would be our US share CFD chart of the day with that high close, with that very bullish candle looking to the upside. TWE. Let's have a look at TWE. Make sure we've got all the data. Whoa, it's a really quite a complex chart, TWE, because they've obviously been bouncing around quite a lot of late. Now, that would be the key level I would suggest. I think any earlier than that would be quite aggressive, and certainly wouldn't fit with the daily chart. So if I had my risk high hat on, maybe 1120, yeah, up to about 1175 possibly, maybe even 11, yeah, around about 1175, 1180, somewhere around there. So it just depends on how aggressive you're feeling. That would be an aggressive entry. I would suggest below maybe 1130. I think there's possibly better chance. Sorry, David, go back to our Aussie Kiwi. I did have a little play with this yesterday. If we look at the daily chart, you can see this is trading within a, let me just get rid of some of these gazillion lines. Just tend to accumulate when I put one chart on top of another. You can see the range we're trading in. So to the upside, we've got 108.14. And we look as though we're relatively comfortable for right now. Possibly 107.50. So those would be the two levels I would suggest are important. Now we've tested this 107.50 twice in the last couple of days, and you can see how much effort it took to actually break through that. I've put this on a line chart, not particularly enlightening. So if we stick it on an hourly chart, it's actually not a bad chart. So we've got this level here at 107.75. So we've got support here. That's now resistance here. With very little to, just take it back, very little to stop it rocking and rolling to the upside if we get some strength in the AUD. So we've got around about 30 pips. So it's not staggeringly good, but it moves a little better than the Forstner trade issue. It looks as though there could be something going on there. Okay. Yeah, we can look at the index as a whole. So here's the ASX 200 just to give it context, but really still trading within a range, but we are moving to the top of that range now. So we can put our line there, which was resistance and support. That's clear. You can see how the ASX is underperformed though, the other indices. So we got that brief foray above mid-Feb, but we can now see we're pushing towards the top of that range. I wouldn't be interested in long trading this until it broke these highs we hit mid-February. But we've had a nice bounce, and certainly from top to bottom of that range has been around about 1.5%, which is okay, but you can see the length of some of these wicks is quite staggering. Okay. BSL, nice chart. We touched BSL, I think, week before last. Suggesting 1864 level was interesting. Big break yesterday. Not a convincing candle of follow through, but if we get a close towards that high of the candle, it could be quite important. But obviously, this puts us now at highs not seen since 2018, and one has to be sort of a little cautious about that. But that looks interesting. The other steel stock we looked at, again from memory, was Sims, and that looks an interesting place. This is actually a good chart to be looking at. You can see there, again, although it's all-time highs, you can see how it's struggled to get through there. So if we do get a break, we could be up and away. Good to hear, David. Well worth keeping an eye on, mate. Well worth keeping an eye. So we've lost it. Have I got it on? Sorry, yes, I do. CSR. We didn't look at any healthcare, but that looks like a nice bounce on CSR. It looks like a very strong bounce. Nice V-shaped bounce, really strong candle today. You would have sort of looked at this yesterday and thought, right, okay, if it breaks 255.80, we might be interested in this. Not sure how much upside there is. There's quite a lot of action around here and here, but nevertheless looks relatively interesting. We'll just quickly check on Sonic to have a look at the other healthcare. Whoa, that's a big bar. So really strong move. Actually, this is a chart that looks very compelling. Take it back, lots of upside in this. You can see if we just put this on a line chart, why this level. So we've had a couple of levels of importance. So that 31.60 level was important, and now we're up to 32.38, which also looks important. If we do get a break of this level and that 200 MA, which is sitting bang smack on that line, So if we get a break over that, maybe 32.70-ish, there's a nice potential upside. Even if we get a pause at this next level here, still around 4% plus, and could even take us back up to here. So nice spot, and we like. Good to see you, Keith. Okay, any last calls before I close down the shop for today, guys? Just while you're doing it, I'll just fill you in on, obviously the next session is on Thursday. We've got a couple of things coming up. So in a circle, I'm going to look at getting into an optimum trading state. Those of you, there's been lots of you obviously attended the psychology ones, and thanks for all the wonderful feedback that you gave me for the intermediate clinics. Been doing some more thinking on getting yourself in the right state, and this is not only from a psychological point of view, but also from a preparedness point of view. We've talked daily agendas before. We're going to have a look at that. So that's tomorrow evening if you can make it along. If you're not registered for that, which I think most of you are anyway. But I'll just copy the link address, stick it into chat. There we go. Boom. And Chris, yes, for sure, we can have a look at that. GB pound USD. Any particular time frame? On the daily time frame, it looks triangular. We've got that and that, which says we're not certain what to do next. Obviously, with that US dollar strength, we've had that pullback, but it's not been significant. It's certainly outperforming some of its peers. But we are almost, if we put that line there, that's where we're possibly at for right now. If we look at this on an hourly chart, you can see how it's used. Let's just take it out a bit, just give myself more detail here. Again, pop it on a line chart. You can see that looks like an important level to the downside. So 138.65. It's not too far away from that now, around about 11 pips. But I'm not sure there's much in this. You might hit a break here. That looks like these two levels here at 138.06, 138 generally, 138.52. They look as though there might be places where you might hit some resistance if we do get a breakthrough here. If we do get a break to the upside, again, we're looking at 30 pips. We're just sneaking some 30 pips here, 30 pips there on a lot of these FX pairs at this stage. But it's so if you're in and out, then that could be interesting in a very short time frame. But you can see there on the hourly chart and even the 4-hourly chart how it's looking. That triangle, that smacks of market indecision. And again, you can see how solid that level is there. So that's the best you could hope to do. But I would be trailing a stop very tightly behind this. And that's if we get continued US dollar strength, of course. I hope that helps, Chris. Okay, guys, we'll just do a quick last check-in on what's happening with local markets. Have we broken a percent yet? No, 0.01 below, but you can see that's about the same. So anyway, look, guys, I hope that's useful for those of you who will see on Inner Circle tomorrow. Look forward to seeing you there, of course. Otherwise, we'll catch you here on Thursday. Bring along your charts, bring along your questions, and thanks, David, that's really kind. And we'll catch you again in the near future. Take care for now. Enjoy the rest of your day. Bye-bye. You're welcome, mate. Cheers, Jerry. No worries. Or if you want to, just like one last thing, if you want the recording link for the session last night, is the same for the, you were sent an email on Friday with the recording link from the first session. So that same recording, if that channel that both sessions are on is still valid. So hope that helps. Okay, cheers, catch you later.